Hi, Spencer here, and today I'm going to talk about how to compare the relative strength of currencies. Now, if you are a swing trader like me, most likely you'll be tracking about 20 to 30 Forex currency pairs. And one of the biggest problems is that when you look at all the different currency pairs, how do you know or how do you decide which pair to trade? Because there might be a lot of pairs, some are bullish, some are bearish. At the end of the day, when you have to narrow down to pick the best, 2 to 3 trades, how do you decide which are the strongest and the weakest pairs to trade and which are the best setups to take? So one of the concepts is the idea of relative strength, where you compare the strength of each currency against another currency. Now, inherently, when you look at a currency pair, it is basically comparing the strength of two different currencies. For example, euro dollar, you are basically comparing the strength of the euro versus the US dollar, right? If you are trading, say, Swiss franc versus the US dollar versus Swiss franc, you are comparing the strength of the US dollar versus the Swiss franc. So at the end of the day, when you want to take a trade, you need to find a way to compare, to quickly decide the strength of every currency against every other currency pair, right? So it is going to be very tedious if you scroll through every single chart to decide whether the setup is bullish or bearish. For example, after you have scrolled through 20 to 30 counters, you still may not know which out of those 20 to 30 which are the best ones. So I'm going to help you find a simpler way to narrow down the search process. So these are the major currency pairs that most people trade. These are also the ones with the highest volume. So you can see there's 1, 2, 3, 4, 5, 6, 7, right? Keep 7 main pairs, and most of the 20 to 30 different combinations actually come about, from these few pairs, right? For example, you have, say, euro against pound, right? Euro versus yen, right? Or Aussie dollar versus Canadian dollar, New Zealand dollars versus yen. So all these different combinations are actually what gives rise to the different forex crosses, as they are called. And so when you are trading, you actually need to find a way to compare all these different currencies to decide which is the best pair to trade. Now, the easiest way is to first look at the common currency. So US dollar is sort of the main currency that the world uses. So if you look at every pair, the main pair, right, is usually against the US dollar. So if you look at a chart, there's actually this thing called the US dollar currency index. So which you can see the symbol DYX. So I usually start off by analyzing this chart. Right? If I look at this chart to see how it has been performing, right, and I decide whether is it going to be more bullish or bearish. So once I've decided the trend of the US dollar index, I have a very good benchmark of I have a very good idea of how to tackle the different currency pairs. Right? For example, if I think that generally the US dollar is going up, then I will tend to be more bearish on the pair on like the euro dollar, the pound dollar. I'll be more bullish on pairs like US dollar yen or dollar CAD. Okay, so but that doesn't solve the problem of then comparing between the different currencies. For example, if the US dollar is going up, right, that means that overall the euro dollar will be going down, right, and so will the pound dollar. But how do I decide whether to trade, say, the US euro, the euro versus US dollar, or the pound versus the US dollar? Right. So the next step is then to go back to your charts and to look at the chart of every major pair. For example, I'll start off with the Aussie US dollar. So I'll look at the Aussie US dollar and I will decide, is it bullish or bearish, right? So if this is bearish, then I will just note it down, like Aussie dollar bearish, right? Then next I will look at the I'll go down to the next pair, right? Say the euro dollar, right? And I'll scroll and see, okay, euro dollar. also bearish, right? And then I can sort of decide, is the Aussie dollar, more bearish or the euro dollar more bearish, right? Next, I'll go to the pound US dollar, right? And I'll decide, okay, how bearish is this? Is it more bearish than the previous ones? Right, so what I do is I'll just go down. So there are actually just 7 charts, right, that you need to analyze. So once you have done your analysis on the 7 charts against the US dollar, you will have a pretty good idea of which currencies are stronger and which are weaker or which have better setups. Right, from there you can then move on, to the next step, right, which is then to decide, which is the optimal pair to trade. Okay, so one of the other ways that you can do is to look at some websites. So some websites, such as this, right, there are actually many more that help you sort of rank the performance or the percentage movements of different currency pairs. So what I've done here is I've created a simple watch list of all the different currency pairs. So I can sort it by, say, the performance over the past 5 days. These are the top performers and these are the worst performers. As I want to look over the past 20 days, I can also sort it, right, based on the past 20 days, right? So this is another simple way to see which pairs have moved a lot and which have not, which are the most bullish and which are the most bearish. However, this is more of just studying the historical trends, because it doesn't really tell you what is the best current setup. For that, it's still better to refer to the charts. Okay, which brings me to my last slide. How do you decide the best pair to trade? So once you have done your homework of analysis of looking through the 7 key pairs, you will then try to find pairs which are sort of going in the opposite direction, right? For example, if the if the euro dollar, right? So ignore this word both here, right? If the euro dollar is bearish, but the pound dollar is bullish, right? Means the euro dollar is going down, but pound is going up. Then it's better to short the euro pound, right, instead of the euro dollar, because this is going down while this is going up, right? So when they're both going in opposite directions, right, it means that the trend is going to be even stronger, right? Because this is a fraction, right? So this is the numerator, this is the denominator. So if the if the numerator is going down and the denominator is going up, that means that the overall the number, the whole pair, right, is going to be even more bearish, right? So the simple strategy is to first look at the I'll just do a quick recap, right? The whole strategy is to look at the US dollar index. Next, you look at the different currency pairs, the 7 major pairs against the US dollar, and then finally, based on that, you zoom in to see whether there are any pairs that have sort of what I call like a double force acting on it, right? Meaning they're both moving in opposite directions. So that gives you an additional momentum, right, for the currency pair. Okay, so that's it for how you can select, right? You can compare the relative strength of currencies and select the best one to trade. So that's all for this video. For more videos and market analysis, please visit us at www.synapsetrading.com, and I'll see you in the next video.